Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock, we'll use financial markets in the US have the jitters ahead of a key speech by Fed boss Powell tomorrow at the Jackson Hole Central Bank shindig. Equities fell, bond yields rose, and the US dollar firmed. And expectations grew. Powell will make the case for only a gradual pace of rate cuts there. Meanwhile, US jobless claims actually fell last week, and by about what was expected though. And the flash US PMIs from the S&P market survey shows their factory sector contracting slightly, but their services sector expanding faster. New order levels are a problem for the manufacturing sector, but service sector activity grew at a solid and increased rate in August. And because the service sector is much bigger than the factory sector, that points to robust GDP growth in excess of 2% in the third quarter, which should allay fears of a near-term recession. Also improving were the July existing home sales, which rose modestly at about the expected level, and that ended a 4-month retreat. In Canada and the US, all eyes are on a stoppage in their key rail network due to an industrial lockout that will have many spillover impacts in both countries. In India, the expansion rolls on there for both their factory and their service sectors in an impressive way, with them shrugging off capacity issues in their factory sector with a notable rise in job creation. Growth is creating many more job opportunities. In Japan, although it rose, its August factory PMI is still contracting, just slightly. On the other hand, Japan's services sector is expanding at a good rate. That is the 7th consecutive expansion in their services sector. In Australia, their August PMIs sort of mirror Japan, but at a slightly lower level. The factory PMI is up, but still contracting. Their services PMI is expanding, although only at a modest pace. And global container freight rates slipped another 2% in a continuation of the minor moves down from the extreme July heights, with the basic pressures still unresolved. These rates are still almost 3 times higher than pre-pandemic and pre-canal pressure levels. There is no real sign of proper normalization. Bulk cargo freight rates rose slightly last week. And the US Treasury 10-year yield is now at just on 3.86% and up 8 basis points from yesterday. But the price of gold will start today down $27 at $2,482 an ounce. And oil prices recovered yesterday's $1.50 drop, now back at $73 a barrel in the US, while international Brent price is just under $77 a barrel. And the Kiwi dollar starts today down 30 basis points from yesterday at 61.3 US cents. Against the Aussie, though, we're up 10 basis points at 91.5 Australian cents. Against the euro, we're still at 55.3 euro cents. That all means our trade-weighted index starts today at 69.4 and little changed. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.